Hello everyone, welcome back to the channel today. It's been a while. I released a video here. I've been on personal growth, trying to build myself in both in trading and also in architectural drawings. Okay, so now today let's talk about something that confuses a lot of retail traders, but also explains so much about why the market moves and the way it does, which is we're basically going to talk about smart money. Smart money. As you can see on my screen there, we're talking about smart money now. What exactly do they do in the markets and how their moves affect us? Okay, so let's break it down. When I say smart money, I'm talking about the big institutions. The big institutions, for example, we have the JP Morgan Chase, we have the Citibank, we have the hedge funds, TEMS, the big banks, the large investors. Basically, the people who trade with huge capital. They can actually move the market with their huge capital. Unlike us retail traders, they are not just clicking buy and sell randomly. They've got deep pockets, they've got patience and strategies designed to trap liquidity and control price movements. So what they do in the market, smart money plays the market like a game of chess. They are the one who cause the up and downs in the market. You see price heading heavily in one direction and then the next moment is turning back the other. So they create liquidity grabs, for example, like they did here. They create these liquidity grabs. Also, they push price up and down, they trigger stop losses. For example, let me just do a quick example for you guys. That was a mistake. Okay, so for example, you see price heading up and then the next thing you see is just come down, clear the buyers from these levels and then immediately turn back up again, before clears out the sellers on this side as well. Those are the big banks and the large investors engineering this liquidity. So whenever you see price taking out highs and lows on the chart like that, that's what we call liquidity being engineered and being taken out. So those areas where you see price swooping out buyers and sellers, those are the market makers. Those are the big banks and the market movers engineering liquidity and taking out traders. So they fill out their large orders in zones where retail traders are most likely getting stopped out. So for example, let me show you with the physical chart, which is like here, for example. Okay, now if you look in here, where we see we have another block here. That was where price reacted to before it gave the buy. But before it gave the buy, it did a liquidity grab on that other block. Okay, so now, for example, you see we had a break of structure. This is a break of structure to the upside. In the first place, when price came back to the other block, we had a break of structure. We had a breaker block reaction here. Price broke structure from here, broke higher. Then we had the first pullback. Then a liquidity grab after the first reaction. We had a liquidity grab on the pullback, which is this. This is the first pullback. And then price did like he wanted to continue the buy and then came back again. Came to the extreme part of the other block, grabbed liquidity on the other block a little, and then rose, give us the real move. So if you look well here, this is basically the market makers in play. This is smart money in play. So they tricked retail traders into buying here. They also tricked traders into buying here as well. The same trick happened here, but that was all smart money, engineering liquidity. If you look here as well, we also had a short-term trigger of buys here. That was all of their game played in the market. They were engineering liquidity here, 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 here. But the moment they grabbed all of the liquidity below these orders that have been engineered here formally when this buy started, then the original move started. So you see, this was the first huge pump, and then the next one, there wasn't much of a confirmation except a rejection block, a rejection candle, and then right from there you see price just kept pumping higher and higher. Meanwhile, for you to be able to trade along with the smart money, you need to have a confirmation to take your entries. If I wanted to take this trade, all I would have needed to do was take on the rejection candle here, or a rejection on the other block. This is the other block here, we had the rejection on it, and then right here will have been my entry. So that's what the smart money do. They use accumulation, which is what they do here, what they did here. This was the accumulation phase. They kept accumulating the orders, stacking more orders as they kept driving down lower and lower into the major order zone. So when you see those sharp spikes like this here, then, or you see sudden reversals, for example, you see this candle more like a bullish engulfing. This was a sharp reversal here. That's when you know that you need to get in, because the smart money are at work. This is when the smart money traders are getting into the market, pushing prices the other direction. So now, here's the thing. Smart money doesn't just leave the market to chance. The market doesn't move by chances. You understand? They move price with real intention. And if you understand their behavior, things like order blocks, liquidity pools, manipulation, there you stop chasing the market. So let me show you another example. So you can see here we have a rejection here on this same level too. A rejection that occurred after a liquidity grab. So you need to understand things like this for you to ride along with the smart money. So next time you see the market faking out traders, next time you see markets faking out traders, for example, you see price reacted here at first and came back like he wanted to give us a buy, but he came back and did what? He grabbed liquidity again. Grab liquidity. What? This is more like a triple bottom. This is still a form of liquidity. Price might at the end of the day come back to this level and grab again. But you keep noticing these sharp moves here. Price grabbed liquidity and went up. Here it grabbed liquidity and went up. Those areas where we have the liquidity grabs, that is where you see the smart money traders pumping in their orders. So if you found this useful, make sure to like, subscribe, and drop a comment, and let me know, have you ever been stopped out right before the market shot in your direction? Let me know of that in the comment sections. Alright, bye for now. Peace out, guys.